If they don't cut rates, I think there's a decent chance we'll have some kind of a nasty event that will then force them to cut rates. And the bottom line is, you and I have discussed so many times, is that the system is structured to require inflation. And if they do not get inflation, the system's going to die. So they're going to get inflation. And how does one protect oneself against inflation? Well, you own things they can't inflate. And the two choices are Bitcoin and gold, and Bitcoin's superior to gold. In a way, Saylor is kind of attacking the sovereign strength of the dollar. Like I say, he won't say it that way. He doesn't want it to be perceived that way to the powers that be, but it really is what he's doing. I mean, he's making an enormous bet, obviously, and it continues to grow and grow ahead of schedule, whereby he's exchanging paper in his company, whether it be debt or equity or preferred stock, but he raises capital in dollar terms that he owes back in either debt or equity or preferred returns. And then he uses that capital to buy a better form of capital, which we all know is Bitcoin. That act on his part is really kind of an attack on the underlying value of capital of the dollar.
In this compelling interview, Lawrence Lepard delivers a powerful breakdown of the unsustainable debt spiral gripping the US economy, and why Bitcoin is the only real exit. From soaring deficits and runaway money printing to the quiet entrance of sovereign nations and financial giants like BlackRock into the Bitcoin space, Lepard connects the dots most analysts miss. He also reveals how Michael Saylor's aggressive Bitcoin strategy is nothing short of a calculated bet against the US dollar, and why that matters for every investor today. Stick around to the end to hear why Lepard believes the next major financial reset is already underway, and why waiting on the sidelines could be the costliest mistake of your life. Also guys, if you like our cryptocurrency content, please remember to like and subscribe to stay up to date. Now, over to Lawrence.
What are your thoughts on SOB 121 being repealed, and just how you see that filtering through the system, maybe how quickly that might happen potentially?
Yeah, let's deal with all that. That's a great question. And there's a lot going on that's some positive, some negative. But to me, SOB 21 was a very, very big deal. It allows the banks to custody the coins. It will allow loans against the coins. It drags the coins into the normie TradFi financial system where they really have until this time. And that's really important.
Do you think that will really limit the sell pressure, just because people now saying, hey, I'm holding this and I'm going to lend against it now. I'm not going to sell it.
It's a great question. I mean, for those of us who have coins that we bought at a lot lower prices, I mean, instead of selling a coin, you might just say, well, I'll borrow against it. I mean, certainly it could. I mean, certainly it will. Yeah, I think it could and it will. Historically, the coin lending services have been relatively expensive. I've looked at it, and I think they're in the kind of 11 to 15% range. Range, which that's what I see. Isn't that particularly attractive to me? But I mean, if somebody were to come to me and say, well, we'll lend you at the Fed funds rate of 4.5% or something, okay, that's a little different. Maybe I would take a loan out against some of my coins, but we'll just have to see how it develops. But I think that we can now assume that Wall Street and the major financial institutions are now in the game. Just like other nation states are now in the game. We now know that Saudi Arabia and Oman and UAE are all accumulating coins. We heard that through Paul Manafort, Matthew Pines at the Bitcoin Policy Institute, basically passed that information along to me at a party. And so I think there's just a lot of stuff going on. I mean, Saylor calls it, we're now kind of in that golden age, gold rush part of Bitcoin development. And I really think we are. I mean, I think the ETF was huge, absolutely huge. And SOB 21 was another piece of it. And it's just, and now, and the BlackRock flipping, that was huge too. I mean, Larry Fink hated it, looked at it, analyzed it, said, you know what, I either got to get on board this or I'm going to get crushed. And so now he figured out how to make money on it launched an ETF, and it's the largest ETF, best performing ETF ever in terms of growth and size. So I think we're in a situation where a lot of things are lined up in a favorable manner for Bitcoin. I mean, related to all this, and this is talked about in the book, is just, the government financial situation is just becoming extremely dire. We're up against the debt ceiling. The reverse repo fund has been run down. I mean, and Trump has already called for lower interest rates. I know the Fed's going to push back on that, but when push comes to shove, will they be able to? If they don't cut rates, I think there's a decent chance we'll have some kind of a nasty event that will then force them to cut rates. And the bottom line is, you and I have discussed so many times, is that the system is structured to require inflation. And if they do not get inflation, the system's going to die. So, they're going to get inflation. And how does one protect oneself against deflation? Well, you own things they can't inflate. And the two choices are Bitcoin and gold, and Bitcoin's superior to gold. But gold's not a terrible choice. It's just a less good choice.
I want to get your take on Bitcoin being, everyone looks at it as a store of value, and it's a cover from monetary inflation, et cetera, et cetera. But the thing I think that, and Jeff Booth obviously talks about this all the time, right? Being a neutral money that captures deflation. Like it's really the apex predator asset to me, because it captures both deflation and inflation. I would love for you to just unpack that a little bit, and stripping monetary premium from all other assets. Yeah,
as we know, it's a deflationary currency because there's a fixed supply of it, and you've got fundamentally, you're over time getting a more efficient world and can produce more.
How do you explain to people or see it? Because to me, I look at it as both a cover from inflation, but also maybe more importantly, deflation in this technologically advancing world.
It is deflationary in currency, and I talk about this in the book. I mean, and deflation is good. And we need to, there's a chapter in the book called Embrace Deflation. We really need to do, and that's the thesis. Jeff's whole thesis is that technology is relentlessly deflationary, and we're running a monetary system that requires inflation. And so the two of those just aren't compatible, and it's a problem. And he's right. And so, Bitcoin fixes this because it is a deflationary currency. And over time, everything gets cheaper in Bitcoin terms because there's a fixed amount of Bitcoin. And that's a good thing. So, I spent a lot of time in the book talking about how part of how we got into this big mess that we're in right now is that the Keynesian model was always fundamentally wrong, but they managed to just keep papering it over and kicking the can down the road. The problem is we're now so far down the road, the can's gotten so big that you can't kick it anymore, or it's close to being unkickable. So something's got to give. And that's actually how I got the name of the book, because what I think is coming is, they're going to have to do another big print. I mean, they've already done a couple. I mean, 2008 was a big print. 2020 was a bigger print. And now they're going to have to do a very big print because of the way the system is structured, where they can't service the existing debt unless we print. What's amazing to me is that we've got these enormous government deficits, 1.8 trillion last year, running at a higher rate than that now. And, ostensibly the market, things are healthy. I mean, we've got a record stock market, we got pretty low unemployment, and we got high but reasonable inflation. So with all of those things, we're still running this huge deficit. It's like, what? How is that? So imagine the stock market breaks and imagine unemployment goes up, tax receipts go down. I mean, the deficit's going to only get worse. And kind of the way I look at it, Brandon, is the U.S. government's kind of like that family that takes out new credit cards and gets more credit to pay the minimums on the prior credit cards. You know what I mean? And because that's what they do, right? They issue more debt and they spend more than they bring in. And that means they have to issue debt. They issue the debt, and that goes into a fixed size bond market. That causes interest rates to go up. Then they do it again. Interest rates going up, makes their deficit bigger. So they got to issue even more debt. This is a debt doom loop. And so it's a cycle. It's a very negative feedback loop cycle that either ends with everything kind of blowing up or everything kind of crashing. It's either massive inflation or massive deflation, or maybe even some combination of the two.
Lawrence Lepard sees Michael Saylor as executing one of the most aggressive and brilliant financial plays of this era, using the fiat system to escape the fiat system. He's raising capital in dollars through debt, equity and convertibles, and converting it into Bitcoin, a harder, sounder money. To Lepard, this is no accident. It's a calculated move. Trade a melting ice cube for a lifeboat, and do it fast. Saylor is consistently ahead of the curve, leveraging weak money to accumulate strong money. The result is a flywheel. As Bitcoin rises, so does demand, and more capital pours in. While governments drown in debt and print to survive, Saylor is front-running the collapse. Lepard believes he's laying down a blueprint for what comes next, and he's doing it before the world wakes up.
We got so many things going on. Let's start here, actually. Saylor, right out of the gate, explain what he's doing. He's attacking Bitcoin with a desire unknown to mankind right now. Certain years he's going to do 21 billion, and he's already eating all that up, and he's just devouring the market. What is exactly going on here with Saylor?
Well, he doesn't say this, okay, because he's more politically wise than to say it, but he's really conducting an attack on the currency market. Max Kaiser had a great tweet where he said that just like Soros attacked the Bank of England and forced them to revalue the pound, in a way, Saylor is kind of attacking the sovereign strength of the dollar Like I say, he won't say it that way. He doesn't want it to be perceived that way to the powers that be. But it really is what he's doing. I mean, he's making an enormous bet, obviously, and it continues to grow and grow ahead of schedule, whereby he's exchanging paper in his company, whether it be debt or equity or preferred stock. But he raises capital in dollar terms that he owes back in either debt or equity or preferred returns. And then he uses that capital to buy a better form of capital, which we all know is Bitcoin. That act on his part is really kind of an attack on the underlying value of the capital of the dollar, because he's exchanging dollar debt for digital sound money asset, namely Bitcoin. And that's what's going to happen worldwide. Everybody is going to do what Saylor's doing before this is all over. It's just that we're at the very early days, because, as you know, $2 trillion market cap of Bitcoin on 900 trillion of global financial assets. I mean, Bitcoin is still only 0.2% of all the global assets out there, if you include real estate in the bucket. So, what Saylor is just saying is, I know mathematically that these guys cannot continue to hold the value of the existing money. And so I'm going to borrow in that money and I'm going to invest into a sounder money. And he's doing it over and over again. And as you know, he announced a couple of programs where he would raise money at the market and then buy coin, and he's ahead of schedule. He's just, every time he turns around, he figures a way to raise more capital on attractive terms and deploy it into Bitcoin. And of course, as Bitcoin continues to go up, it becomes reflexive, where his returns look even better. And then there are more people who want to invest with him, and so on and so forth. I mean, very much in the same way that the sovereign debt cycle is a reflexive negative feedback loop, where they have to continually issue more and more and more debt to keep the government solvent, and it gets worse as interest expenses get worse. Saylor's doing the exact same thing in reverse. He's borrowing in that currency but putting it into a better currency. And this is true. I mean, it's amazing. I mean, he raises these converts at 0% interest. And that's because his prior converts they've paid very low rates of interest, and they've had 47% upside. I mean, what convertible bond manager expects to get a return of 30, 40, 50% in a couple of years? If they get that return over 10 or 15 years, they'd be happy. So because what he's doing makes so much sense, it attracts more capital, and then more capital accelerates the whole process. So it really is kind of an amazing financial flywheel that he's found. And I don't think most of the world has really taken the time to deeply understand this and just how profound this is. I mean, it's like he's found a money machine. Eventually the world will figure that out. He'll have competitors, etc., but not right now. He's all alone.
Lawrence Lepard leaves no doubt. The global financial system is breaking under the weight of unsustainable debt, distorted markets, and reckless monetary policy. While most people remain distracted or in denial, Lepard sees the writing on the wall, and he's acting accordingly. For him, Bitcoin isn't just a speculative asset. It's a lifeboat, a peaceful revolution, a bet on a more honest and decentralized financial future. And if he's right, those who prepare now may not just survive the coming storm, they may emerge on the other side stronger than ever. Thanks for watching, and if you enjoyed this video, please remember to like, subscribe, and share your thoughts in the comments section below.